Good morning, options traders. So I'm talking a little funny today. I've had some work done, some dental work. So anyhow, I wanted to get into this start to finish trade that was done in the futures. So I put this trade on. It's let's see, been about I think I've been in it about a week, something along those lines, maybe a little more. And it is a calendar spread that's 18 days, 21 days. So I sold the 1117. I bought the 1120s. Now, this works great if our market is right around that 4270 mark and we were under this tent. This would have some decent profitability in it. But if we look at our market here, we can see that the market has sold off quite a bit. So this trade was put on back in here. Around this range, the market has sold off a fair amount. So the question is, where would I see the market going from here? Well, with technical analysis, I can see it maybe coming back up here to this 4250 range. Or it could also come down into this, 4050 range or even 4,000 range. So if that's my scenario, 4250 down to maybe 4,000, how can I adjust that trade to accommodate that general range? So if the market goes up to the 4250, that would be great for this trade. This trade would benefit very nicely. If the market, however, continues down into this 4,000 range or 4050 range, not so much, not so good. So given that I envision this trade probably ending up more downside than upside, there's an adjustment that I can make to a calendar where I turn it into a diagonal trade. So how I would do that is I would basically come in and buy this put and sell one a little further down. So let's just see what that looks like. So what I'll do first here is I will add in another, let's see, this is an 1117 put, so I will sell a put. I don't want to go down very far here. I'm just going to go down like 10 points, maybe to 4260, and I'm going to buy that one. Then I will come in here. I'm going to buy back to close this one. I said buy that one. I'm selling that one, of course. Now I'm going to buy to close this one. We can see the bid-ask spread here, 110 to 111.25. So it looks like if I were to go at 110.75, that would be realistic. So I'm going to buy to close 110. Let's see, 110.50 I think is probably an appropriate number now. So 110.50, buy to close. And you can see what that now does for this position. That essentially puts this position to where it has no downside risk now. And if the market goes up to 4250, somewhere in here, there is a little bit of risk involved in that. But let's look and see what happens as this decays over time. So as this decays over time, it basically gives us a much wider area of break-evens. We can go all the way down here to 4060, all the way up here to 4320. So basically, we've opened up the downside on this trade. There's much less, in fact, no downside risk really on this trade after this adjustment. So let me just save this trade, and I will, let's see, what I'm going to do here is going to put adjustment 1, and I'll, let's see, we entered this trade on 10/20, so that was about 10 days ago. Now on 10/31, we diagonalized by rolling in our short put. And then I'll just overwrite the existing trade because I kept a copy of this already. So that's where we're at now on this particular trade. Basically rolled one of these puts a little bit lower, our short put, rolled it a little bit lower, turning this into a diagonal instead of a calendar. Now you can see that our max loss increased in this, because if the market were to rip up considerably, I did take on upside risk in exchange for removing downside risk. And that was kind of the whole game plan, because when I look at the market conditions, my expectation is that this downtrend is likely to continue. And if we do rally up into this range, I don't see us going all the way up here to 4,300 or so. I see us more likely either getting up here to about 4,250 or even down at 4,050. So again, 4,250 right in here, and down to whatever doesn't make any difference. Both of those are going to be decent scenarios after more decay comes in. So again, we need to have a little more decay happening here as well, a little more time decay, about another 10, 12 days of time decay, as well as the market kind of staying where it is, or again, staying in this much wider zone. So that's it for an adjustment here in our futures calendar trade. As always, please like, subscribe, give me any comments. Let me know that this content is of value to you, and we'll keep doing more of it. Thank you so much, everyone.